Okay, good. So today I thought I would do something very different from what I've been doing since. So currently, obviously, I'm learning ICT concepts, right? And I'm marking up my charts, and slowly I'm beginning to understand a little bit, right? Beginning to understand a little bit of everything that's going on. So obviously, I trade. And my goal for learning ICT, the main reason I started learning ICT was to learn. I had a goal to become, or I have a goal. I have a goal to become a gold day trader, right? That is that's my reason for actually starting or wanting to learn how to trade ICT concepts. So moving forward, what I'm deciding to do, seeing as I'm making a bit of progression, is whatever trade whatever trade idea I have, I want to do a recording of that and publish it on my Forex journal. And then after the trade plays out, whether it's a win or a loss, I want to also journal that. And this way, just like helping build muscle memory with the things I'm doing right, so I can do more of that and look at it wherever I do wrong and try to avoid doing that. Right. So this is not live trading. So if anyone watches this video, if I post any trade idea out there, please don't take that as a bias, right? Even though I'm confident in myself enough to say that I know that I'm going to call the market right, right? I know that I'm going to call the market right sometimes. That doesn't mean anyone should be taking those trades on a live account. Even if you want to test it out, do that on a demo. And the best thing would be not to even test it out. If you want to re- copy anything that I'm doing, maybe you should start your own um, journal, and instead of trying to take my trades, you can go start the process of learning how to trade ICT concepts. Like if you find any kind of value, instead of trying to copy me or follow trades that I'm doing or whatever, just like try to understand how to trade for yourself so that you can make decisions for yourself. You really don't want to be dependent on anybody when it comes to like trading. But I know people have different situations and everything. But please, the main idea I'm just trying to pass on is not to not to use any of what I put out as signals. Just it's just for learning purposes and it's for my own learning as well. But I just know that people are going to see the video at least. So so I want to start from the monthly time frame before, because I've been saying I'm bullish on gold. I've been bullish on gold for a while now, right? And it's always good to start the top down analysis from the monthly time frame, sometimes even from the 3 month time frame, right? But something we can see clearly on this monthly time frame, you can see these equal highs here, right? Which what will retail be calling this? What will retail traders say this is? And this is the whole point of trading ICT, right? We're trading smart money. We're trading with the institutions and all of that. That's what people say. But basically, we're trading with order flow. And currently, order flow is to the upside. Why? Because we believe there's liquidity resting above these equal highs, right? So we have one, two, three, right? So if someone was to want to sell this market, this is what they would technically have, right? So what does that mean? That means we have liquidity resting above here. And liquidity is not just stop loss, right? Liquidity is stop orders in general. So that could be even buy stops. Some people are waiting for a breakout, right? People want to see the market break to the upside and all of that. So that in itself is also liquidity. So seeing that we have that on the monthly time frame, we also retested this monthly order block here. This candle right here is a bullish order block, and we can see that after this bearish candle printed, we had this bullish candle that engulfed this previous candle's range or previous candle's body, right? So this is a strong break of structure, right? Which means that we know that a monthly candle is 4 weekly candles, and then we now saw the next 4 weeks. take out the previous 4 week candles, right? So that's what we call a break of structure. So this market, you can see we had bullish month, a bullish month, a bullish month, then we had a bearish month, then we had a bullish month that broke out of the previous month's range, right? So price came back to retest that. That becomes a bullish order block. And now we're looking to see price continue to the upside to potentially take out these equal highs. So that's my bias from the monthly. So dropping down to the weekly, and bear with me, guys, like it's very, very important to always do this top down analysis, right? So we have a balanced price range. Again, a balanced price range is just like a fair value gap that did not hold. So this is the fair value gap, a bearish fair value gap, right? Price was supposed to come into this, and this was supposed to act as a form of resistance, right? So this is what we're meant to see. If this, like following the concept of fair value gap, there's supposed to be some form of resistance there, but price just blew through it, right? So we're expecting to see that coming back to act as support, right? Because resistance turns to support, but support and resistance using smart money or using ICT is not really like the normal equal highs and equal lows and all of that. No, is these are what we use for our support and resistance levels, fair value gaps. We use fair value gaps. We use order blocks. We use mitigation blocks, breaker blocks, and all of that. So my internet is kind of bad right now. As you can see, the labels have disappeared off the chart. And I think we're back now. Okay. So let's drop down to the daily time frame because I'm just trying to give you a clear idea. I'm just trying to paint a clear picture of why I took that trade, right? So now we've seen a balanced price range on the weekly time frame, right? And we saw how price respected it as support. Now we have another balanced price range on the daily time frame, and I'm also expecting that to act as support, right? And you can see that right here. We have this fair value gap that was supposed to act as resistance. Sorry guys, my internet is not very stable. And this is the problem we have as Nigerians, right? Sometimes it's electricity, sometimes it's internet. So yeah, we're expecting this to act as a resistance. Obviously, we're in a bullish market, so I don't expect when I'm bullish, I don't expect any of these bearish or I don't expect any of these bearish PDRAs or premium PDRAs to hold, right? So we can see price move through it just like we saw on the weekly time frame. So I was expecting support from a retest. If we were to get a retest of it, I was expecting to see support. We did get a retest, and I was looking for opportunities to buy, right? So I'll just go straight to the hourly time frame. I'll go straight down to the hourly time frame. So on the hourly time frame, what did we see? Again, we saw price. You can see this huge bearish candle moving down, right? And this is what can lure a lot of sellers. And this happened by 8 a.m. New York time. So 8 a.m. New York time is basically like 1 p.m. Nigerian time, right? That's yes, 1 p.m. Nigerian time. So yeah, people can chase this move or they wait for a retracement, right? So you can see this little reactions price had at this level, right? Where people are looking for the retracement and they're taking their sell positions here, putting their stop losses above here. And when they take a trade like that, what does that mean? That means, so let me get rid of this for now, right? And I'll put it back. So let's say I take a trade here, right? And I have my stop loss here, right? Because I'm expecting this market to continue to sell because I don't understand smart money. Let me say I'm using a Fibonacci strategy and I'm thinking like this is making lower highs and lower lows, lower high, lower low, lower high, lower low. I'm expecting a new lower high and a new lower low. So stop orders are below here. Buy stops, sell stops, stop losses. Well, no, sell stops cannot be up. I'm sorry. Buy stops are above here and stop losses are above here as well, above this high. So that being said, um, for me, the strategy I use is very simple, or the strategy I used for this trade, and that's something I did a little bit of backtesting on, and I'm going to keep on backtesting over time, right? What I did, and it made sense to me, right? It made sense to me, so that's something I'm going to be doing more backtesting on because it's something I could just understand because my mentor, I'm taking I actually have someone who is mentoring me, Master Dan. He's the owner of like the Arc Institute. So if anyone knows the Arc Institute, if you're watching this video and you know the Arc Institute or you know Master Dan, right? He's who I'm currently learning from. So as you can see, he pointed out something about the open price. So let's look at this candle. This candle here, midnight, New York open, midnight New York open. So the opening of that candle is the opening price. So I mark that out. And what I want to see is I want to see I want to be able to whenever I'm buying the market, I want to buy at a discount, right? And whenever I'm selling, I want to sell at a premium. So what does that mean? That means whenever I want to buy, whenever I'm bullish, I look at the opening price for that day. I look at the opening price for that day and I want to be able to be a buyer below the opening price of that day. Because I believe Master Dan, he made me understand that. And I've heard of this in a couple of ICT videos, but I really did not understand it until Master Dan taught it again and I really understood it very well. So what that means is whenever price is below the opening price of a day, when we're expecting that day to be bullish, if I'm expecting this today to be a bullish day and price is below the opening price, that means that that's manipulation, right? That means if price is pushing down currently, it's only luring people to sell because that daily candle is supposed to close bullish. So if a daily candle is supposed to close bullish, the candle is not meant to be going downwards. Do you understand? I hope somebody understands what I'm trying to say. A bullish candle, a candle that is meant to close bullish, should not be selling. So when I see selling pressure on that day, I know that that's manipulation. And if price is below the open price, right, I want to be able to be a buyer below the open price for that day. So you can see that my buy entry is actually below the open price for that day. Is below the open price for that day. And that was how I was able to frame my buys. The first target was these highs here, obviously. Second target will be these highs. And then third target will be 1968 right here, right? So if I was to be in this trade, hypothetically, I would have taken 80% of my position off and I would move my stop loss to break even, right? So this is a 1 to 3. So a 1 to 3, let's say I risk $1,000 on this trade, right? If I risk $1,000 on this trade, right now I'll take off 80%, right? So the trade will run $3,000. If I take off 80%, that's me taking off like let's say $2,400 thereabout, putting my stop loss at break even, which means even if price is to come back down to this level, I will not take a loss, right? I'll be stopped out at break even. And then I'm saying this I want price to take out this second high here, right? I want price to come for this equal highs. So if price comes for this equal highs, I'll make and I'll take off 50% of the position I have. So I'm currently running at I have 20% of my position of my initial position open. So if price comes here, I'll take off half of that, which means I'll take off like 10% and then I'll hold the remaining for here. So this is my ideology for my trade management, right? This is the ideology I'm using for trade management right now. So let's actually look at my entry. Let's actually look at the entry I used, right? Let's look at the entry I used. So for my entry, what I observed was okay, we saw that huge move below, right? Below the opening price. That daily, we ran into that daily BPR, that daily balance price range. Okay. So we did not just run below the opening price, right? Let me go back to the daily time frame and point it out. And this is how we build extra confidence, right? I know that I'm bullish already. I know that I'm bullish. Now, price did not just run down. He also ran into this balanced price range. As you can see, we ran into this balanced price range, right? To act That's acting as support. It acted as support. And let me see if we got up to 50% of this daily candle. Did we retrace up to 50%? Yes, we retraced up to 50% of this daily candle. So these are multiple confluences. We retraced up to 50% of this daily candle. We retested the balance price range. We have equal highs, right? All of these are good reasons why I want to buy, right? And I'm not saying I did not take this by expecting like the possibility of not taking a loss. Obviously, I could have taken a loss, or this could not have played out. But like I'm just saying, there were some good reasons why it was reasonable to take the trade. Now, something I like seeing is turtle soups. All right, so ICT talks about turtle soup patterns a lot, and that's something I like. And a turtle soup is basically something like this, where there's a move to the upside, and then price breaks lower, and then makes that move higher, right? So this is price taking out these lows, right? That's like a turtle soup. This is like a false move, right? And this turtle soup happened within that daily balance price range. So we are seeing a turtle soup within a daily BPR, right? This like the confluences were just stacked. This trade would have been for me. There's people that don't like trading breaker blocks, right? So a breaker block is basically we have this candle, these three bullish candles, one, two, three, right? That moved in this direction, and then price took out these lows. So we consider these three candles, these three bullish candles, a breaker block. So what I did right here, so you can see this, right? So this is our breaker block. So what I did was I took Fibonacci from the low of the breaker block to the high of the breaker block, and I marked out the 50% level, right? Because I did not expect to see price come back to close below the 50% level of the breaker block, right? So I marked out 50%, right? And I just placed the stop loss below the 50% of that breaker block, right? You can see that these two candles they mitigated perfectly. So I just put my stop loss below the wick of this candle, right? Again, that's not to say that you cannot get stopped out. The real sense of it, the safest way to trade a breaker block is to have your stop loss below this low, right? But just trying to maximize profit and minimize risk, that was why I opted to try out this, right? This is not the safest way because there's some times where the market is not going to move too cleanly. It's going to pull back something like this. It might reach for another PDRA on the lower time frame and then continue to the upside, right? So this is a riskier way of managing the trade. So yes, this was my entry. My entry was a retest of this breaker block on the 5 minute time frame. As soon as price retested the breaker block, I was like, okay, we could see price rally from here. And just like that, we saw price rally from there. This is a 1 to 3 setup, and we've taken off 80% virtually or in our minds, right? Because that's the ideology I'm building. And then we'll take off another 10% at these highs at 1964, and then we'll hold to 1968 for final targets. So I hope this was insightful. This is a really long video, but I hope whoever watches this is able to learn something. And but this is just me basically logging my trades, and this is me practicing. This is part of the practice. This is part of the training, and over time, I know I'll become so much better at my analysis. So yeah, I'll end this video here, and I'll see you guys in the next one.